All right, traders, it is the 3rd of December, 2017. My name is Jameson. Let's take a look here at a relative rotational graph here, the sectors, and see if we can find who's trading in the resistance, who's trading near support, and who's showing some relative strength, and see if we can't kind of get an azimuth and tighten up our shot group and find out where the opportunities might be here next week and into the end of the year. So first up, we can see here, this is the leading sectors. We can see that energy's here, finance, materials, also materials. Materials are right here. And we can see that this discretionary is really crossed over with a lot of momentum. That's should look for some opportunities there in discretionaries, as well as the consumer staples here. It's been a very big laggard, and it's really starting to see an increase in momentum. It's not showing relative strength. We're not going to see relative strength until it crosses over this line here. So until it starts to outperform the S&P, it will still remain as a laggard, but it's over, I guess, relatively speaking, it's oversold, and it's a good opportunity when we're trading at highs for money to rotate into. So we might see some bargain hunting here, or some money rotating into, I don't want to say safer, but maybe more into value here within the consumer staples industry. I apologize. So let's look here at some weekly charts, and well, it looks like the first one up here is the energy sector. And first up, we can see that we're actually going to get a kind of a golden crossover here between the 20-week and the 40-week moving average, and we're trading along the 56 weeks or the 12-month trading average. So it looks like we're not trading in the resistance. There's certainly some more upside here. We have a nice close at highs. RSI is rising. Nice strong volume increase, ease of upward movement. Again, closing at highs. And the relative performance of the sector to the S&P is in a neutral to improving position. So I like XLE here moving forward on the weekly chart. If we look at materials, here we have a bull flag, little breakout, little supply, as we can see that little upper wick here. But this may be just in the process of back testing this prior breakout. So this week and next week will be key. We can see that definitely that's been a nice bullish trend as the 20, the 50, the 100, and the 200-day moving averages are all rising. So there's a little bit of risk because this one is trading near highs. I think the energy sector maybe provides a little bit more upward price discovery, but material certainly has a play in keeping markets where they're currently at. I still like the material sector. If we look here, next up would be financials. And if we look at the financials, we're kind of trading the resistance. Now, that said, we're trading the resistance. We have, a rising RSI, tons of volume, increased ease, closing at highs. Chalk and money flow still bullish, MACD here. The relative performance here is spinning outperformer, good sector rotation. So I recognize that we're trading in the resistance, so we're kind of buying in the resistance as far as longs go. But if you ignore the upper trend line that's here, or maybe not ignore it, but just realize that we're breaking out of this price range. I mean, we've been in this trading range here since, looks like 12 to 13 months. So we're just breaking out of this 12 to 13 month trading range. We broke down, we found some support here, but confirming this long-term level of resistance, as support, there certainly is an opportunity for prices to continue its upper price discovery here in the financial sector. Certainly a place that we'd look to for some rotation again, despite trading into resistance. If we look here in the industrial sector, similar circumstances. We're trading in the resistance of this bullish ascending channel. It's trending. You can see the 20 to 40 and the 56 weekly average are rising. We have a little bit of a bearish divergence here in the RSI, strong volume. MACD's, bullish territory, little inconclusive here, a little neutral. Now the linear relative rotational graph is actually showing that we're seeing some relative, not weakness just yet, just that participation is being withdrawn, it's losing momentum. So the fact that it's trading into resistance here, I think there's other sectors that provide other opportunities, most recently XLE and consumer staples, that I probably look for opportunities over the industrial sector at the present time. If we look here, let's go to the next weekly chart. So next up, we're looking at technology. Technology here, the RSI looks like it's oversold, but it's in bullish territory, so don't be dismissive of it. Chocolate money flow is improving. MACD is still rising, although we're showing a decrease in momentum. Relative performance-wise, it's an outperformer. Still seeing some sector rotation. The momentum continues to improve. We're trading into resistance here, this bullish ascending channel that I didn't outline, but is still there. Now, here's what's interesting is that we have a huge amount of selling pressure here, yet prices didn't really break down. So big effort, little reward. You have to ask yourself, this might be some supply. At the same time, it may have been an opportunity that creates some liquidity, and there are some buyers there. So we may see another reaction where technology retests highs and challenges the 65. But again, it's trading in the resistance here. I still would be a little bit more focused here on energy and consumer staples. Next up, here's our consumer staples, and if we look, other than the position on the relative rotational graph, we can see here that it actually is within a bullish ascending channel. The averages are trending. We have a bullish RSI breakout. The chocolate money flow is still negative, but it's starting to show some improvement. We have a MACD that's upswinging. Relative performance is still poor, but it's starting to improve, and we can see that here on the linear graph, if we go over here, we can see it's at 95, and we're starting to see some improvement in momentum. So, these are just the coordinates here on the X and Y axis. So you can see here that it hasn't been, this is relative weakness, which corresponds with this location here in the actual graph. But again, this may be an opportunity to find some buyers. And one of the reasons is that it's not quite trading in the resistance of the upper trend line. So a few of the other sectors are already trading in the resistance. I think there's still some upper price discovery here within the sector before it kind of becomes overbought relative to the bullish ascending channel or to its actual trend that's there. So I do like consumer staples. I think I've said that already a couple times. Let's look at utilities. And next up, here we are. So, we had this rising ascending wedge. I don't get too much in those because in this bull market, those have been washed out quite a few times. We did have an angle of decline here on the RSI, which has been violated, so to the upside, so a little bullish breakout there. We're seeing a close here at highs, and that's important because 2 weeks ago, we had this, attempt to push higher into resistance. It was rejected. We had what looked like a little inside session, and now we're starting to rally above there. So that all in this strong volume speaks that we may see, a breakout above and create some overbought conditions relative to this trend. But again, relative to some of the other charts, again, this one's trading the resistance. That would suggest that, it's a lower risk opportunity, or it's a low risk opportunity here for shorts. Bulls would be buying into resistance here. So again, I like the energy sector and staples. The chocolate money flow, we're starting to see it decline. So it looks like volume or demand is contracting. MACD is still in bullish territory. Neutral, performance, and we're starting to see that that's relative performance was being withdrawn, but it looks like it's starting to curl up there a little bit. So I'm a little indecisive, but it looks like price actions leading where prices are going, and it's closing at highs. I would suggest probably that we're going to see a rally then a pullback. With everything trading near highs, that probably suggests that the market will continue to be at highs, if not kind of had the rally sold and continue to trade laterally. The healthcare sector here traded in resistance, pulled back down into the 20-week moving average, and then close out near high. So, on strong volume, we're seeing a little bearish divergence here in the RSI. The chocolate money flow is showing some contracting demand. MACD is showing some decreased momentum there, but still bullish territory. The relative rotational graph here, the linear graph of it, is showing that some participation is being withdrawn and it's kind of losing some momentum. So we'll likely see another test here, this range, and then kind of continue to consolidate. The trend's obviously bullish, but again, I just looking at the weekly charts, I would very quickly say that my preference, again, remains the consumer staples and the energy market. Here we are, the consumer discretionary. We're trading in the resistance. Nice volume here, bullish momentum. We're not an outperformer yet, but we saw in the relative rotational graph that it's starting to see some participants and it's increasing with increased momentum. So again, if I'm looking for a lower risk entry, I probably would focus here on energy and consumer staples. So move it into this week and the rest of December here. That's probably where I'd primarily focus on a couple of my opportunities of the trade. So how do we find those trades? Well, let's just go here. I'm a Stock Charts members. You can go to the control center. Under the control center, you can quickly just go to sector summary. And if you go to sector summary, we can focus here on energy. And as soon as you open up energy, you can see who actually last week was outperforming. You can just click on here in the industry, and then you can see kind of where the money is rotating. Click through here and find out which trades that you like. Same thing here. For consumer staples, find your consumer staples here. Here we are. And you can just kind of go through here and find the industries, and this is how you can kind of find some trade setups specific to the sector and the industry that you're interested there. using the relative rotational graph and just scanning those weekly charts for opportunities. So just some quick thoughts, some observations. I hope you found that helpful and informal. Good luck trading next week, traders.